Good afternoon. Here are the closing market comments for Thursday, March 31st. The much-anticipated government reports were released this morning. The USDA's acreage report was mostly neutral as corn and bean acreage came in very near the pre-report estimates. But the quarterly stocks report was a bullish shocker and sent all grain prices sharply higher. In fact, corn locked the limit higher all day long. May corn finished 30 cents higher at $6.93 and a quarter. New crop December corn also limit up 30 cents at $6.25 and a quarter. May soybeans up 38 and a quarter at $14.10 and a quarter, and new crop November beans up 31 and a half, finishing at $13.95. Kansas City May wheat up 46 cents at $9.08, and Minneapolis May wheat finished 37 and 3/4 cents higher at $9.23 and 3/4. In addition to the friendly news from the government reports, outside markets also friendly towards the grains today, with crude oil up $2.34 a barrel at $106.61. Gold market is up $11 an ounce at $1,435. The U.S. dollar index down 29 points at 76.06, and the Dow Jones stock market very quiet, with the Dow currently 2 points lower at 12,348. Livestock markets also saw some gains today, with April cattle finishing $1 higher at $121.55, while the April hog contract finished 17 cents higher, closing at $93.72. The USDA released two government reports this morning. The first, the 2011 prospective planting report. In that report, corn acreage came in at 92.2 million acres. That was slightly above the average trade guess of 91.8, and 4 million acres above last year's planted total. Overall, the corn number coming in very near the average trade guess. In soybeans, USDA estimated planted acreage this spring at 76.6 million acres. That was slightly below 300,000 acres, below the average trade guess of 76.9, and about 800,000 acres below last year's planted total. The soybean number in general seen as just a little bit friendly, but again coming in very near the pre-report estimates. In wheat, USDA's total wheat planted area at 58 million acres came in about 700,000 acres above the average trade estimate of 57.3, and that is about 4.4 million acres larger than last year's planted total. Overall, the planted wheat number seen as slightly bearish. If we look at the change in corn acres versus last year, we can see that about 4 million acres more projected to be planted this year. Breaking down where those additional 4 million acres are going to come from, if we draw the Mississippi River down the center of the chart, about 3 million acres of additional planted area are going to be planted in the western Corn Belt this year, while the eastern Corn Belt is anticipated to see about 1 million acres of additional planted area to corn. What's also interesting to note is that almost all states are showing a small increase in planted area, with the exception of Texas and Montana, and both of those states relatively insignificant corn producers. Taking a look now at a similar chart, the change in soybean planted acres 2011 versus last year, 2010. Again, a total of about 800,000 less acres being planted this year into soybeans than a year ago. A majority of the reduction in planted acres in soybeans this year is going to come in the heart of the Corn Belt, notably Nebraska, Iowa, and Ohio, while increases are seen in the northern plains, North Dakota and South Dakota, and also some increase in acres in the deep south. Turning our attention to the second government report that was released this morning, let's take a look at the quarterly stocks report, grain stocks as of March 1st in the U.S. March 1st corn stocks were estimated by the government at 6.523 billion bushels. This was the biggest shocker in the marketplace today. That stocks number coming in 167 million bushels below the average trade guess, and nearly 1.2 billion bushels below last year's quarterly stocks number as of March 1st. This stocks number is the primary reason why corn was locked limit today, and many believe that it will be at least 30 to 40 cents higher in tonight's overnight trade as well as tomorrow. In soybeans, the USDA estimated March 1st bean stocks at 1.249 billion bushels. That was 50 million bushels below the average trade guess. Also, this is seen as a very friendly number, given that we were already extremely tight with stocks, and now seeing a stocks number for March 1st that's even below the average trade guess. This continues the overall bullish story in soybeans. In wheat, 1.425 billion bushels of stocks were estimated as of March 1st. That came in about 26 million bushels above the average trade guess. And of all the numbers we saw today, the wheat numbers were seen as the most bearish, but obviously the bullish corn and bean numbers more than enough to pull wheat along in today's prices. Summarizing the corn news, estimated corn planting came in at 92.2 million acres. This was slightly above the average trade guess and within the range of expectations. March 1st corn stocks came in at 6.523 billion bushels. This was 167 million bushels below the average trade guess and considered very bullish for corn prices. The reduction in ending stocks confirms that strong demand continued in the second quarter, despite corn prices moving above $7 per bushel. In addition to the bullish stocks report, USDA reported weekly corn sales of old crop corn at 1.91 million metric tons. The marketplace expected large sales due to the announcement of 1 million metric tons of old crop corn to an unknown destination, but today's number nearly double even that. And today's weekly sales number is the largest sales of old crop corn in a single week in over 7 years. And all of these sales coming on top of a corn situation where stocks are already critically short. Summarizing the bean news today, estimated planting for soybeans came in at 76.6 million acres. This was slightly below the average trade guess, but within the range of expectations. March 1st soybean stocks came in at 1.249 billion bushels. This was 50 million bushels below the average trade guess and considered quite bullish for soybeans. Similar to what we just mentioned in corn, the reduction in ending stocks confirms strong second quarter demand despite bean prices at $14. Outside markets were also providing support to the grains today, with energies, metals, and livestock all higher, while the U.S. dollar traded lower. Estimated planting for all wheat came in at 58 million acres. This was above the average trade guess, but well within the range of expectations and seen as slightly bearish. March 1st wheat stocks came in at 1.424 billion bushels. This was 25 million bushels above the average trade guess, and this also was considered slightly bearish for wheat. Despite the generally bearish news for wheat, prices were pulled higher today by the strength in corn and beans. Another supportive factor for wheat today is the weather. Mostly warm, dry conditions are forecast for the southern plains, which will likely result in lower crop conditions, and higher abandonment of wheat acres is also a possibility in the southern plains. Cool, wet conditions are forecast for the northern plains, and that will make timely planting of the spring wheat crop quite difficult. Taking a look at the May corn chart, corn prices today closing at $6.93, up the 30-cent daily limit, but the option prices are indicating that futures are likely trading near $7.31 per bushel. That's 38 cents above today's close. The red dot on your chart does signify where today's option prices indicate that futures could open tonight. And so putting those prices at $7.31, it really puts us close to that $7.44 previous high that was posted back in February. It does appear very likely that corn prices are going to challenge those highs at $7.44, and a lot of people asking, just how high could corn go? If we see any weather problems, or if the funds decide to come in and start buying back a lot of the contracts they've been selling over the last couple of months, then we could very easily break into new highs and challenge the previous all-time highs that are around $7.62 posted back in June of 2008. Turning to the May soybean chart, beans had been in an intermediate-term downtrend, but that trend was broken today, and today's high at $14.32, taking out the highs posted in early March, and that does, in fact, open up the door towards the previous highs at $14.67 that were posted back in early February. We believe it's very likely now that prices will, in fact, challenge that level at $14.67. And if we see any signs of adverse planting conditions or growing conditions early this spring, or if the corn market surges into new highs, we definitely would not rule out beans pushing above that level and making new highs up around that $15 level here as we move into the planting season. Turning to the May Kansas City wheat chart, wheat very similar to beans in that we had an intermediate downtrend that had been in place over the last 4 to 6 weeks. That downtrend has been broken now, and given that we have broken that downtrend, the next level of overhead resistance coming in at $9.32, which were posted in early March. And with wheat being primarily a follower to the corn and bean markets right now, if corn and beans would push into new highs, it would then possibly open up the door for wheat to trade back towards that $10 level that was hit back in the month of February. The wheat market did not receive the same type of bullish fundamental news that corn and soybeans did today, but wheat nonetheless is very likely to be a follower, is likely to move higher following the corn and soybean market. Therefore, we expect the long-term uptrend to remain in place and wheat prices potentially challenging that $10 level here over the next couple of months. This is Dan Cowger with Heartland Farm Partners. Thanks for joining us and have a good afternoon.